Andrew Holland is now joining us. Andrew, what is the sense that you get? Firstly, what is your stance on the market? Would you be bullish even at current levels?
Yeah, well, I think last time we spoke, we said that valuations were a bit challenging, and that still remains the case, hasn't really changed. I'm not seeing, I'm not overly worried about the correction we saw, globally. It's probably been on the cards for some time now. I think as we go forward, though, what we will have to look for is delivery by not just President Trump, but other governments as well in this talk on more fiscal spending, lower corporate and personal tax. So we need to get some more news on that to keep markets sustainable where they are today. So that's what I think will drive global markets, and obviously we'll be affected by that. I think the earnings season here won't be anything to write home about, because most companies we speak to, have not seen any V-shaped recovery since demonetization, and as we could have hurdled towards GST, if that is going to happen after July the 1st, implementation could again pose a few challenges for the economy with a disruption of at least 3 months minimum. So that again could impact earnings. So I think at this point, if we can consolidate without too much of a fall, I think that would be the best we can hope for the markets in the short term.
But do you think that the global trend in the markets is positive? I mean, the Dow Jones, S&P 500, every correction is being bought into?
Yeah, I suspect that any corrections, either globally or locally, will be bought into. There's no kind of big event which could rattle markets at the moment. Obviously, the French elections is one, but we saw over the weekend the debate there had Marine Le Pen, who is the far right leader, slipping some of those polls. So that gave a lot more confidence to markets. And that's why you're seeing the euro so strong against the dollar. And I think that's going to be a pattern, is that the dollar is going to weaken against the yen and the euro going forward, which will be supportive towards commodity prices and going forward. So I think there's a not as immediate big risk for global markets in the very short term. Apart from the French elections, but obviously markets, after that kind of strong rally after President Trump came in to office, will now be looking for delivery on some of those promises, not necessarily in terms of what he's been doing, but more towards the economy, because that's really where the kind of belief in global growth is, and we're in the same page, will keep markets where they are.
Right. If we just talk about the global markets, do you think the biggest risk for the markets is what happens in US policies going ahead? And, global markets can suddenly become from risk on to risk off. Is that the biggest risk in the markets?
Yeah, I mean, that's exactly what we're saying, is that, we've moved, hopefully we're moving away from, central banks' monetary policy, which really wasn't kind of working by throwing money against the problem or at the problem, to more fiscal, governments taking charge. So that's why, I think even whether people like or dislike President Trump, he has views, and he's seen as a strong leader. So if he can bring in infrastructure spending, which he's already said, I'm going to spend $1 trillion, unfortunately he hasn't given a timeline on that, along with lower corporate and personal taxes, and that's what's going to get the global economy moving. But without the implementation or more news on the implementation of that, then it's kind of a little bit more like hope, and hope is starting to fade. So we need to start to see governments start to kind of actually deliver on some of the promises they're making in terms of spending. I think if that's the case, then markets can resume, their kind of move higher.
Right. In terms of Fed and Fed rate hike, do you think that is less relevant now versus what it was earlier?
I'm sorry, is what?
The Fed hikes and what happens with Fed trajectory going ahead, is it less relevant for equity markets than what it was earlier?
So I think Yellen was very definite in terms of another two rate hikes this year. But if you look at the 10-year U.S. bond yields, I mean, they've fallen from that interest rate hike when they were running around 2.57 to 2.41 today. So the market's saying that we're in this kind of not catch-22, but we're in this kind of no man's zone where if President Trump does start to kind of deliver on kind of fiscal spending and low corporate taxes, that will propel the economy, and therefore interest rates will move higher. But obviously, if he doesn't, then you could have a weaker economy, not just for the U.S. but globally, and that's what the fight is at the moment, is whether that's going to be implemented or not, and that's why you're seeing a little bit of jitters now in global markets.
Right. As far as India is concerned, do you think that earnings trajectory in FY18 will be the most important? Because last 3 years, investors have been waiting patiently for earnings growth, but that's not happening.
I think it's another year of being patient, because already, forecasts have been brought down from 20% growth for 17-18 to 15%. And if I'm correct, that the implementation of GST can disrupt the economy for a minimum 3 months. Then earnings probably have another notch down to say 10%, and that's probably where I think we'll see the earnings for this year. So there will be disappointment, and that's why I'm saying at the beginning that valuations are stretched. There's no real kind of huge momentum in terms of valuations to help the markets, but obviously global markets, if we see global growth starting to accelerate, will bring India up at the same point.
Right. So you expect downgrades to continue? You think 18% number is still optimistic?
Am I expecting?
Are you expecting that in FY18 EPS further downgrades are possible?
Yeah, I think so. I think we're probably at 15% or 15 to 20% is a consensus by most brokers, and I think that will have to be brought down nearer to 10 if the disruption on GST plays out a minimum 3 months. It could be 6 months. So I think you won't see earnings really start to accelerate in India, to my mind, till the last quarter of 2017 into 2018. So 2018 will be the time when maybe the 20% that most forecasts have been talking about actually might materialize for the first time, but I don't think it's going to materialize in 17-18.
You mentioned about GST implementation and what sort of impact could it have on the earnings. Do you think it will have a big impact as far as earnings downgrades are concerned?
So we'll have to see how it plays out, but obviously, for the large corporates, that they're saying that they're ready for implementation of GST, and whilst it's a great thing long term, I'm not sure small and medium-sized businesses are quite ready for the implementation. And obviously there's going to be lots of tax kind of queries and issues around what's happening. So I would have thought that what you might see is some destocking ahead of the implementation, which again will have an impact on earnings. So yeah, I do see this disruption hurting earnings in the first 3 months of implementation, or just prior, as companies take a more kind of wait and see approach, how the systems start to work, how the tax collections start to move through the system, and obviously that will throw up cash flow problems for small and medium-sized businesses. So that's where I'm kind of a little bit nervous. I mean, it's a huge task. Anywhere else we've done this in the world, it takes at least 3 months of problems to kind of resolve, and we're a much larger country than the ones which have implemented these types of reforms before.
What would all of this mean for flows, especially domestic mutual fund flows?
So I think flows will continue to domestic mutual funds. I don't see that stopping. I think obviously a lot of the asset classes which people favoured in the past, such as property and gold, are not really on the investment horizon yet. Although I do feel, and I've said this before, that real estate might be the dark horse for the second half of the year. And that's based on the fact that as affordable housing continues, to gather pace, that will help shore up, the kind of real estate market. So I'm not saying that the top end of the market will rise at all, but what it could do is consolidate, and that gives at least a lot of the builders time to kind of repair the balance sheets and get some cash flow. And that's, would then see, maybe in 2018 a pickup at the top end of the housing market as well. So it's not something we're betting on at the moment, but I think could be a dark horse kind of sector for the second half of the year.
As far as FII inflows are concerned, Andrew, emerging markets have just seen a pickup, and really a big pickup after 2009-10, or after 2009-10 we've not seen such pickup for FII flows. So don't you think that these flows would also continue?
So it will continue on the basis of two things. One, that global growth, as we expect, will start to accelerate, because obviously a lot of emerging market countries are exporters, and that would shore up and help their economies going forward. Also, it should be supportive to commodity prices, which again would be good for a lot of emerging market countries. So that's why you're seeing a lot of flows towards emerging markets, because valuations are compelling in a lot of emerging markets, where two things are there. One is exports to the world, and two, commodity prices are linked to that. Whereas India, from a FII flow perspective, is probably at the back end of flows, because it's a more defensive, domestic-driven economy rather than an exporter. We will get flows because emerging markets will get flows, but I think we're going to see our, the flows probably ebb away after this, probably by the end of this month, as they kind of move towards Indian market, which was, I think, on twofold. One was that the UP elections gave a lot of confidence back to foreign investors that reform process will continue. So I think you'll see money coming into India, but I don't think it's going to be a blockbuster year, that's for sure.
Andrew, what do you think about demonetization? What can be the impact on organized retail? Do you think organized retail will continue to grow versus unorganized?
I think the implementation of GST will be a large move towards that, moving from unorganized towards organized. And I think it will be a continuous progress over the next years to come. So I think it's a positive for a level playing field for everybody, and I think that's what is exciting about GST. I said, we're notwithstanding the kind of implementation problems. That's going to be great, across a whole host of industries. It's not just going to be the retail industry. It's going to be where the unorganized sector have had an advantage because of tax, which they won't be able to gain anymore to the extent they have done. But that will take some years to kind of play through, not just for the companies, but also for the economy. But it is a good move.
But how would you play this organized retail story? Would you go via the names like, DMart, which got listed yesterday, which sell everything, or you would want to fix and stay to a consumer name like Havells or Crompton, and then probably play this in a specialized company where the market share of unorganized is still pretty high?
Yeah, I mean, I think you have to identify where a few things. It's very easy to do broad brush, but you've got to see, the positioning of companies within their own sector, whether it's unorganized and what percentage share they could get back. But obviously, we've got to look at each of the companies in terms of their product profile, what they're offering, and if they are the ones who can take the market share, or which of the companies will. So, broad brush, you can, all the companies will probably move, but there'll only be one or two winners from it. So we're still looking through that, but I don't think it's something I want to bet on to say that this is the right company. I think will be an evolving model going forward as GST is implemented. So I'm not overly negative on the retail sector, but I just think that valuations, for some of them are quite challenging before we implement GST. So I'm not. I don't think it's a sector I need to rush into at the moment.
What do you make of the listing of DMart IPO, the valuation that it markets has given to this company?
Well, I mean, obviously, it's very high, right? But the market and investors seem to believe that the company has strong growth prospects going forward, which it does have. But again, I would be from our perspective and the fund, we would probably be a little bit more cautious in terms of wanting to buy at these levels. If global markets were to say fall, then I'm sure there's enough profit on the table for people to take. So if you've either it was underpriced massively or it's just run ahead of itself, and I suspect it's probably run ahead of itself in the very short term. So you can wait for the dust to settle a little bit, and you could probably buy it a little bit cheaper.
Right. In terms of particularly Avenue Supermart or DMart, till the time growth is as high as 40-50% what it has delivered in the last 5 years, markets will give it a premium multiple?
Yeah, I mean, in terms of a sector, you have very limited avenues of investment, and some of those are littered with companies which haven't made very much money. So if you can find it's a bit like the kind of airline sector. It's not been littered with many companies making money. So the ones that do, will obviously command a premium, and I'm sure this company will as well, given the growth rates it's achieved and what it's expecting. And then that's what I'm trying to say to you. You have to look at each of the companies individually and look at the growth prospects. But it's a good addition to the retail sector because it was, very limited in what you could really buy. And some of the earnings have been very disappointing from the retail sector previously.
Do you think the IPO markets would continue to do well in 2017? Some of the names that want to come up with IPO still are looking very interesting.
Yeah, I mean, listen, the IPO market is a reflection of the equity markets too. I think if you just if you step back and go back 3 or 4 months before we saw this market run, I think if you look at the IPOs that we had previous to that run in the markets, have gone to a good premium. Some have continued to hold those, if not go ahead. But a lot of them are below the IPO price as well. So again, it goes back to individual companies and the prospects for them and the sector. So whilst I believe that the IPO market will continue to be, to see favourable companies or good companies coming to the IPO market, we have to look at the valuations, and at the moment some of them are, either said underpriced or overvalued on the day of listing. So I would not take one very successful listing and say that's going to happen to every listing.
Right. In terms of sectors that you like or stocks that you like, do you think IT is very attractively valued, at least in terms of PE and the growth rate expectation in the sector?
So IT is a sector which we've not liked for a number of years now on the basis that the business model or the decade of growth which they all enjoyed is really broken. So when you look at how to value this, you've got to say, has their business become commodity-like, which it has, and is that the kind of valuation you should afford to it? That would be a little bit too pessimistic. So then you can say, okay, it's throwing off a lot of cash. Should it be more like a utility? But if you value a utility, then you want dividends, and they haven't been high-paying. None of the IT companies have been high-paying dividends. So what I would say is that if they're doing the combination which they're doing now, which is hopefully will pay higher dividends and do share buybacks. I want some, if you can't use my capital as a shareholder, then give it me back, please. Then that's one kind of help that will shore up the share price. But guess what? The business model still hasn't been fixed. So the fundamentals will always come back to these companies. So unless they're going to continue to buy back shares year after year after year, then there's nothing really to fundamentally want me to buy this sector until it gets to a PE of around 8 or 9.
Right. So right now you're not expecting any major growth revival in the sector?
No, listen. I mean, the growth has been faltering for for the last 5 years, right? And the business model, I'm not saying is broken, but it has to be changed, and that's what you've been seeing each of the companies trying to grapple with, and they've brought in different management to try and do this to get that growth factor back, and it's just not happening. So as I said, it's not as though I'm saying it's a well, it could be a sector, which has now, seen all of its growth over the past decade or so, and there's just, it's just going to be a steady earnings. And if we're getting the dollar weakening, then this is just yet another headwind for the IT sector. Given the rupee is strengthened against the dollar too. So, I can't say I'm excited about the IT sector at all.
Right. In terms of pharma, what is the call that you have, especially with what happened with DVs yesterday, Dr. Reddy's? Do you think the sector valuations are still expensive or not factoring in full risk from US FDA?
So, you kind of get drawn towards pharma because valuations, are kind of looking more exciting or a little bit more compelling. The problem you're facing is that after years of problems with regulatory with the regulators in terms of the processes and so forth, you would have thought they'd be passing this by now or have fixed the problems, but it doesn't seem to be the case. So it's not a sector you can happily sleep at night, which you should be able to with the pharma sector. So it's a sector we've avoided. We'll continue to kind of avoid most of the stocks. Because of those regulatory hurdles that we keep facing. And also, I'm not a great believer that, when Trump talks about lower pharmaceutical prices or lower drug prices in the US, that is automatically a good news for Indian pharma companies at all. If anything, I think it could well turn out to be more negative than it is positive.
Which are the sectors then you like?
So the sectors we like are, is some of the private banks. I'm talking about the kind of the blue chip private banks. We're still avoiding, though it's kind of tempting to kind of think about PSU banks, but the problems are still there. They haven't gone away, and nothing's changed. So they will continue to lose market share to private banks, NBFCs, anyone who's got a bit of capital and can take market share. They will do it against the PSU banks. So private banks. Building materials, obviously, because we think the economy will start to pick up after GST is implemented, and any company which is geared in terms of a global context to either exports or has manufacturing plants in the US, Europe, or distribution bases there, so they can benefit from the global growth scenario which we're talking about. So those are the kind of three or four areas which we're looking at, and as I mentioned before, possibly the real estate sector in the second half of the year.
Right. Let's talk about these sectors one by one. For private sector banks, you can divide them into two parts. One is the retail banks or banks that are doing very well with good growth, and one is the banks that are struggling to fight with NPA but still have potential to grow. Which category do you like within these names?
So it's a combination of a little bit of both, actually, because we want I can't go into the individual names, but if you take some of the bigger private banks, you can see that the retail growth is very strong. Their kind of corporate growth remains robust. So these are the kind of banks which are continuing to take market share. When I look at where they are in terms of the kind of digital network is way above or way ahead of a lot of the kind of PSU banks. So, whichever way I look at it, they're going to continue to take market share, and that's where we're focused our efforts there.
Right. In terms of real estate, what is the call that you have? Do you believe real estate prices, that's the underlying commodity prices, would go up, or you believe that number of transactions would go up and these companies would benefit?
No, I'm not saying that. What I'm saying is that with the affordable housing continuing to show growth, across the country, that will have a backdrop of supporting the whole industry, and that gives companies at the higher end of the market the kind of capacity to get through some of the problems which they've been facing in terms of cash flows and therefore, people being able to kind of finish projects. And I think that's what I'm after. And if we can get to see that, the evidence of the top end starting to stabilize, particularly with builders being able to kind of fund their projects or get funding for their projects, then I think we'll start to see a revival in transactions. But it doesn't necessarily mean that top end prices are moving higher. It just means that cash flow is better, and that's what real estate companies need at the end of the day. And if that's the case, then they will be revalued.
Right. And in terms of real estate, again, I know you cannot name stocks, but would you focus on companies that have cleaner balance sheet, or you would look at companies which are high in debt and then probably could see a better balance sheet going ahead?
I think it's a combination of the two, because obviously those with strong balance sheets already have a premium pricing over the other stocks in the sector. So what I would look at is each of the real estate companies and see where they're positioned in terms of their strength in terms of markets, the product range which they have. To benefit not just from affordable housing, but as the increase or the kind of consolidation at the top end starts to come through. So that's the way I'm looking at it. It's not there could be pockets where you can look at certain companies in certain parts of the country and say that that's an area which I see exceptional growth, and those are the real estate companies. But I'm taking a little bit more broader brush at the moment, so I'd be looking at someone who's a company which has more broader reach across the country rather than just one particular area of the country.
Right. Also, just a word on the exports that you mentioned. Would you want to play that export story via auto ancillary?
I think it's auto ancillary falls into that. Auto companies fall into that. Steel falls into that. The only two sectors which don't fall into it, for my more negative reasons, are pharma and IT. So I'm looking more at the kind of manufacturing type of company, which will benefit from global growth rather than a service type service type industry.
Andrew, thank you so much for taking out time for us. Always good to get a perspective from you. That was a view from Andrew, bullish on private banks, selective, bullish on certain other affordable housing themes which he believes can do well.